Morning, everybody. Give me 1 second here. All right. Hopefully you're doing well. Yesterday we had a brief market review, which was posted into the YouTube vid section. Not as a YouTube link, but just the recording is posted there. I'll forward that to the reviews channel if you want to go in and watch it. 1 second here. From yesterday, kind of covering the price action from yesterday, since obviously I did not stream, and why I chose to sit out after around 9:48. So this morning, I'm gonna right off the bat, we have somewhat of just a weird weekly profile and just a weird dealing range in general. I find it very hard to find one-sided price action and trust obviously one way or the other. I'm favoring at this point bullish price action, just of what we've seen on the 4-hour, the 1 hour, even on the weekly chart. We have this kind of almost immediate closure back right through the entire drop down that we had last week, and it's completely just rebalancing that entire range, coming back up into deep premium. So on the 1 hour chart, 4-hour chart, the low-hanging fruit objective would just be the previous weekly high. That makes sense for right now, but we're stuck within this 4-hour gap right now. And on the 1 hour chart, seems like there's a tiny inefficiency in here paired with that swing high, and we have SMT currently on both sides of the market, at the swing highs and at the swing lows down here. So I wanted to let opening range play out a little bit, which is what I said into the daily bias chat there. Gonna let opening range print out 50-50 at this point, because to me there's not really anything clear coming into 9:30 that I'm going to trust to take as a swooping opportunity. I'd rather take more of a continuation move if it offers it to me. But obviously if there's no entry today, then that's perfectly fine. But I found it kind of a weird, except for maybe Tuesday and Monday. Those 2 days I think are pretty reasonable for bias wise. But then Wednesday, Thursday, Wednesday, yesterday, and then today, a little bit more challenging. So if you struggled yesterday with a bias, or if you struggled and got chopped up yesterday, I said on the stream, that's perfectly reasonable. Sometimes it just happens. But yeah, right now, I mean, if you look at pre-market, we had 8:30 news here, unemployment claims, and it's just been in this chop fest since the start of the New York open session. So since 7 a.m. onwards, even since it's energetic run up here, I can't really find any meaningful manipulation, highs and lows. So it's just kind of watching this, and already right now, this deep retracement into the order block already showing you some signs of high resistance. We're waiting for a fair value gap to form, and that'll start to show some strength or weakness in price. As of right now, though, we are still within this consolidation range. This right here is your minor buy side liquidity. We don't have any 10 a.m. news. Trump is speaking in the PM session at market close, so I don't expect that to have any effect for the morning session. But upside targets, we have this fair value gap on the 1 hour chart up here. And then as well, within of that actual gap, we have 15-minute time-based liquidity, which would be the AM session high from Friday. And then obviously the all-time highs resting from Thursday. Sorry, Thursday's AM session high, and then Thursday's daily high. So we have our first gap there. That's not really super inefficient because of the fact that it's placed right within that balanced price range in here, you know. And now on the 5-minute as well, this healthy candle closure all the way through the wick of this is indicating some 5-minute order flow starting to print. So I would love to see it close through this bias of liquidity. And also, if you can form a fair value gap in here, I'd be interested in that, which we do. Nice. So I would look at this more as your first presentation gap. It's a little bit more inefficient. Zoom out a little bit. This is just your minor buy side. And if we were to be bullish for today, the first starting time that you'd want to see the high of the day form would be 10 a.m. onwards. So this sweeping the buy side, that's why I kind of want to see it close above and obviously continue into higher PD arrays, is because of the fact that if we are bullish, it should run this, potentially rebalance, and then come back up for premium. On the 2-minute gap, we have a bullish order block here, so make sure you annotate that with the first presentation gap. You love to see how it was respected within there. And I would love to see this used more as a breakaway gap than an actual inefficiency at this point, if we are to be bullish. Got to run on stops lower with SMT at the lows. You can see in here, ES running out their lows here, NASDAQ failing to, YM failing to in here. So SMT at the bottom, 5-minute structure has not displaced yet. I will say that. We did get a market structure shift technically through this swing high. And like I said, this kind of candle closure you're seeing here with this wick coming up and then it comes down into the inefficiency and then closes all the way through. That is typically one of the stronger algorithmic signatures that you're going to see. So how it reacts to the first presentation gap and the 2-minute order block is going to be important for me. And you can see now on the 15-second chart as well, this kind of breakaway gap that we have marked out in here has price action kind of working through. Now there's not as much down closing candles that you see in here, but there's not that overlap in the inefficiency, right? So now that we're trading through it, price action is not as bullish as you'd like to see, obviously shooting through the order block and the efficiency. And past the breakaway gap, this is where I would go back and kind of not delete a bunch of PD arrays, but go back to consolidation mindset, meaning, okay, we need to see either a shift or another SSD with displacement to then qualify we're going to leave this consolidation. I do not want to be sitting in price action that's going to move like it did yesterday. So waiting for added displacement and not just marking up PD arrays and spending a bunch of mental capital is typically the best thing you want to be doing. So we can be watching these arrays. That's perfectly fine. We can check for these SMT at the highs, which we do have at the highs still. And I'm also going to be watching the 5-minute order flow at this point. But for those who are maybe struggling with entry models, I know for the past couple of months, maybe if you're just trading the 950 macro, you may have had some trouble finding those good continuation moves. The 950 macro is best in the spring and in the fall. So, sometimes you're left with just scalping moves or entries that are giving you partials and then you get stopped out. So exploring other entry times and entry models is something that I suggest everyone to do once you're comfortable with one. I think you don't need to have anything more than one. That's perfectly fine. But having one entry technique or a handful of entry techniques and maybe one or two different entry times is something that you should be striving for, I think. So My favorite two are 930 and 950. And you have to treat them differently, of course. And the entry models that I'm using for each are pretty, for the most part, different. Um, but I think it frees up some mental capital, right? You got to make your model that is adapted to your psychological flaws and fears. So if your fear is not getting an entry, you know, it wouldn't be a bad idea to have different types of entry techniques and tools that are there for your assistance. It doesn't mean that it's a coping mechanism where you're just going to start getting in there, taking a bunch of bad trades, but rather just understanding that, okay, if the market is in a high probability environment and it's likely to move one-sided, I have ways of getting in. ICT has 81 PD arrays, 81 different entry models that he uses. So he probably doesn't use all of them, but if he understands where the draw on liquidity is, what type of conditions we are in, what time of day we're using, he knows a method of entry. So in here, as we're consolidating and coming into the open, I'm not looking to take a 930 trade, you know, even if I may understand where it's likely to scalp towards. Basically, if I understand where the 15-minute candle is going at 930, you can take that as a scalp most times. But if I'm trading 930, I typically want to be getting majority of the range unless I expect it to be a swing to Z day. So if I'm coming into the market and, you know, I'm either 50-50 on my bias or it's this kind of weird choppy PA coming into 930, I'm less inclined to take a trade there. I'd much rather wait till after 930 prints, let some open range print, kind of help that develop some of my bias, and then take a trade going to macro time, take a trade maybe after 10 o'clock and see how that goes. Since we have 8:30 news today, majority of my focus is typically between the times of 9:30 and 10 o'clock, 10:10. With today's PA and this kind of chop we saw going into 9:30, I'm more inclined to push that further back. So, 9:30, even silver bullet, I'm fine with taking if it's valid. If you're value up in here. Still watching this 5-minute order flow. That to me that's going to be the most important. Anytime you're getting caught up in here, just zoom out. Go to the 3, go to the 5. When I started dealing with consolidation in the beginning, my instant reaction, and if you struggle with it, is to just go up a single time frame, whether that's to the 3-minute or to the 5-minute. It is one of the best things you can do, because especially if you have a model that's on the 1-minute, having some sort of 5-minute filter is extremely important. You have a 5-minute filter, meaning, okay, if I want to take a 1-minute for value gap plus order block plus discount entry, I need to see a 5-minute change of the state of delivery, or a 5-minute IFVG, or a 5-minute market structure shift with displacement. That's going to filter out, a ton of different entries that may have been unfruitful for you, or may have been early, or may have been stopped out right before the new move happens. So having this higher time frame to lower time frame filtering system makes it so when you get down to the lower time frame, you can start to trust the PA. Right? You see me take trades on the 15-second chart, and for some, that's probably super confusing and scary. But I have the same approach, right? If I'm looking at the 5-minute and I like what I see, I look at the 1-minute, I like what I see. 15-second should be the same exact price action as the 1-minute chart, just slightly faster. But if I believe that we are in this kind of one-sided delivery and PD arrays are going to hold because my draw on liquidity is correct, doesn't matter if I'm on the 5-second chart. Those models and those PD arrays will all be used as the same, but I need to have a fractal way of looking down. If you're just dropping time frames to drop time frames, meaning if I'm just going to the 15-second because I want to get an entry, I'm going to find an entry, because you can look at how many different PD arrays are there and how many different things you could find. Of course, you're going to find an entry there. And that was a problem that I had to face and deal with, because I would be super confused as to why those 15-second trades weren't working. It's because of the fact that I was just dropping to drop and find something in there that was not actually in line with my bias or actually in line with what was going on. The 1-minute would be choppy, and my first result would be, oh, the 1-minute is choppy, let me just go down a time frame and I can find something there. Which is true, right? There's not really much of a fallacy in that statement, but rather just the fact that those entries are probably going to be subpar, and you're not going to want to take them if the higher time frames are not lining up. You don't have a strict bias. Like you look at this, right? You got somebody's maybe looking for shorts right at 950. You got a gap and kind of a weak order block here. Okay, 15-second chart. But you look at the 5-minute. This is the king session order flow, right? You want like order flow for the session. You look at the 15-minute or the 5-minute. The 5-minute typically is going to be a little bit better because you have more candles to read than like 4 or 5, But, you see these gaps and all this stuff on the 15-second chart. You look back at the 5-minute, you look at 930, up, down, up. It's like the pacer test push-up thing. If you know what I'm talking about. But at this point, you can look at the lows here, right? There's no visual SMT anymore. You can look at the 1-hour chart for PD or ASMT, which you do have, but yeah, I don't really like it too much. So right now the SMT, the most visual SMT that you can see is at the highs up there. Now SMT by itself means absolutely nothing. Another thing that you want to avoid is getting into this habit of thinking that as soon as you see SMT, you could just flip bias. Don't do that. Right, if you see SMT on the other side, go back and redo your entire higher time frame analysis. Go back from HTF to LTF. Make sure that SMT has a spot. Right? SMT is maybe step 4. You got to figure out 1, 2, and 3 to make sure that you can flip bias. Otherwise, you're just flipping bias because you see one PD array. You're gonna have normally that's just from a lack of confidence. If you make a bias, you have a lack of confidence in it. The first PD array that you see that invalidates that theory, even just by a little bit, you're going to be inclined to change your outlook on price action. So a lot of times there are these things that we do that are either coping mechanisms or direct results of psychological fears and flaws, and it takes someone else to point them out for you, or just deep introspection for you to find those flaws. Otherwise, you're going to keep doing them, keep thinking it's a technical error that you can't read the market, when in reality it's just lack of trust or lack of belief in your model or in your ability to find a bias, etc. So you can see in this, we're just up, down, staying within the range. Your value gaps on both sides of the market, it's very important, right? We tend to think that consolidations are going to be just this choppy move back and forth, right? What good would be consolidation if no one actually trades in it, right? Another word for consolidation is what? Accumulation. The point of consolidation or accumulation is to accumulate orders from retail, less informed money, and then obviously manipulate and distribute them to informed money. If there is no speed, if there's no momentum, people are not going to be tricked into trading into consolidation ranges. So you will see a lot of times, especially at 930, you get psyched out because the fact that these ranges are high, like 30, 40 points, sometimes 60 points, but you will see displacement on both sides. Gaps on both ends. And it's very hard to trust which one is which. So the best thing you can do is just wait for gaps to form outside of that consolidation range, high and low. And then you can start to see, okay, is that where it wants to go? But you look at this price action in here, how it's gapping up and down, taking both sides of the market. 5-minute is kind of clustered. Look back at yesterday. The same kind of PA that we were getting yesterday coming into the open, right? Choppy pre-market session, coming to the New York session, gaps up, gaps down, gaps up, gaps down, gaps down. At this point, 952, which fair value gaps are going to hold? What's your bias? How do you know when your bias is right and how do you know when your bias is wrong? At this point, there's too much information that's can't be trusted. Therefore, that is what? Low probability. So sure, you may be able to find an entry in here, but I would much rather sit out when there's data that I can't trust to see if, okay, this is where a point where I would close up position, or this is a point where I would enter in. It's going to be programmed in the sense to just consolidate, either on a higher time frame or lower time frame, and that accumulation itself is where you get stopped out. So, and we know that typically as you develop a model, The 3 times that you're going to take a loss, number one is a wrong bias. Easy fix, right? You just go back in, you'll say, oh, here's my bias. Here's probably the explanation as to why it was that. Number two is you misidentify high versus low probability price action. And then 3 is you mismanage a position. So those are typically the 3 ways that you take a losing trade in the future if you have a developed model. And this would be more probably leaning on number 1 and all 3 of them, actually. You may have an incorrect bias. You don't know that you have an incorrect bias because it's displacing back and forth. The fact that it's displacing back and forth and maybe giving you PD rays that you want makes it so you misidentify this as high, when in reality maybe low probability. And then as a result, you place your stop somewhere that seems safe, get stopped out, goes to your take profit. Price action, that's much harder to deal with, right? So at this point, we did have some displacement there. I'm checking to see if we have some T at the bottom, which not really. It was kind of funky. You can see we're also decoupled a little bit. YM and ES are moving somewhat lower, but Nasdaq's struggling. So I'm looking for displacement outside of the range. But hopefully that all made sense. Now, it is August PA as well. So, notoriously, it's been a very difficult month. Probably top 2. We got December and August kind of hand in hand. So, we're not expecting there to be clean moves. There will be moves within the week. You know, Tuesday, I think, was probably the best opportunity this week. We'll have to see if we get anything else. I'm watching this gap right here. It wants to come down into it. If otherwise, potentially see that as a measuring gap. Let me actually measure it. Yeah. And in terms of last manipulation, don't really have any clean ones. I mean, this almost looks like it's doing the same exact thing as yesterday. Now, it is 8:30 news, so we expect it to expand a little bit. Just putting us up near all-time highs. And now, at this point on the 5-minute chart, you're starting to see some, if we can get a closure here, it'd be nice. But you're starting to see this as a, change in the state of delivery on the 5-minute. So in here, you could look at potentially all of this as a breaker in price action. Preferably that, that uppermost candle or candles. See this as a breaker, right? Low, high, lower, low. In this case, that runs out liquidity from sell side, internal sell side stops. And fair value gap is being placed right in here. Also, we are in a key time, macro time. So you love to see how each of these PD rays here are being used. And you would not, at this point, I would not want to see it drop below the first presentation gap. I want to see if we can come back down and use that upper blue box. So let me put this in predictions. At this point, do not want to see it drop below FPFVG. Let me just set up this paper trading in case we want to take anything on demo. And now I can argue that, okay, the 5-minute starting to line up, the 1-minute starting to give me PD rays. Go to the 15-second chart, and we can start to see if there's any refined levels. You can see in here, there's a bit more of a gap, right, in an order block. So that would be an area of interest. And on the 1-minute fair value gap that we have up here, it's already kind of balanced this out. You have some tiny inefficiency right in there. But we'll be watching on 15-second chart what it wants to do. You can see that such a healthy closure there on the 5. About 4 seconds left on that candle. Now, if in fact it just wants to use this upper wick of this breaker and not actually drop into the fair value gap, it's very, very strong price action. Got to be careful not to just chase the PA, right? I don't want to just be marketing in long here, although it may be really strong. That's a little bit more sketchy, I think, because then where do you place your stop? That's the main question you got to ask. Of course, you could potentially be finding long opportunities, but where you place your stop is a little bit more of an important question, because otherwise, if you're left with a 1-to-1 or less than that, it's normally a trade you don't want to be taking. So in this case, I've marked out the, yeah, or you just don't use the stop. That's also an option. And this, you got premium deal and discount, got your bullish order block in here. You watch how price reacts to that. Now drop back into the inefficiency. So now that's a little bit of a better entry. Okay. So the breaker 50% would be the kind of textbook stop placement. Now it's already kind of displacing through this, so I do want to see how we react. But yeah, I mean the first presentation, kind of what I said before. First presentation gap has got my attention. So back into inefficient section of the 15-second chart there, plus the 5 minutes SD, plus the 1 minute fair value gap. And in the future, this would be used as a reclaimed if we are in fact bullish. Yes, still has not changed its 5-minute structure to bullish yet. Same thing with YM. YM actually is a bit more bearish. You got a fair value gap in the 5-minute we're trading back into. And I'm starting to leave that. You can check up on DXY. DXY is starting to move higher. I mean, not really. I'm just stuck within this consolidation range. We've already took out both sides of the stops. I mean, gun in my head, I'm liking that. So that would be bearish price action on the indices. But come back down into the breaker, into the fair value gap there, touching consequent encroachment. I'd like to see if this is going to be used as a reclaimed bisi or not. I do want it to close, give some displacement through 50% of this range. We're using that reclaimed bisi. Yeah, yes, and YM still are not as bullish as I'd want them to be. Well, a YM is just dropping there all the way. Is that a new daily low? Nope, not yet. I mean, YM is going for their daily low right now. ES stay within the range. NQ bullish. To me, that's just hands-off environment right now. I'm going to keep monitoring it on my other screen here. Let's just see if ES does want to flip. I'm just not convicted enough yet. There's a little bit of doubt in my mind. Yeah. Back into first presentation gap. What is SSMT? Or is that just a typo? Oh, session SMT. I mean, yeah, session SMT does have an importance to price action, but sequential SMT. Yeah, I have not studied that enough to say something to look for. Yeah, to be honest, I just haven't studied it enough to really say. I don't subscribe to the QT kind of methodology. So starting to hold the first presentation gap and got displacement out of there. So if it can come back down and touch that order block, that'd be lovely. Came down, touched it. Absolute chop right now. I didn't just sit out, to be honest. Everything else looks bearish. ES dropping all the way through this wick. YM obviously going for their London lows and daily lows. Trading through the first presentation gap, like I said. So FPFEG has been traded through. ES and YM both bearish. And NQ is indecisive. So unless we can get some crazy follow through, I'm very tempted to just sit out. But that's right, looking like absolute meme PA. Also wrapping up on here on macro time. Yeah, SMT at those highs as well. Trying to see a 5-minute order block. You're below constant encroachment there. have to immediately rebalance this, right? Yeah. Right at 10 a.m. we formed the high. There's a 9:30 open. I mean, short-term target would be the current session low. And then below that, you got maybe like pretty far down. Midnight open, London low, things like that. But right now, it's just not really showing any willingness to move lower, move higher, just kind of stuck within this consolidation range. At this point, I would expect it to move lower with ES, YM both pushing downwards. Nasdaq starting to push downwards a little bit as well. So probably just wrap it up here, right? Not a whole lot of stuff. I mean, you can maybe watch till takes out this low or if it comes back to first presentation. But I mean, it's kind of just the same PA we've been seeing all morning. So if anything happens, I'll update you. But as of right now, it's just subpar at best. Not something that really has my attention. You could look for, since we just ran up the highs and we're getting some SMT at those highs, you could look for a 15-minute inefficiency in discount. Potentially down for the 415 fair value gap on the 15-minute chart. We got this one in here. Right in here. That's right in discount inefficiency on the 15-minute chart. And then you have obviously the London low and Asian low. So, I mean, that would be kind of targets for the rest of the session if you're looking for that. Otherwise, I would just say most probability would be just to kind of sit out on this price action, let it play out, and we'll figure out what's going on after the fact. Right? So be safe, be smart. Hopefully not too much more PA that we're going to be miss in today. I'll post the recording obviously once it is finished. And if you got any questions, you can reach out to me on my DMs, or we'll do a market review probably later today and cover anything if anything really happens. Sound good? So stay safe, be smart, and I'll talk to you guys very, very soon. Peace.